This is Bazaar Morning Call, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning, hello and welcome to a fresh new edition of Bazaar Morning Call, live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant. As always, with me, my colleagues Sonia and Nigel. Guys, hi. Good morning.
Morning.
Morning. Looking a little different today, are we?
We are celebrating Republic Day.
Absolutely, which means tomorrow
is a holiday.
It's a holiday. So,
anyone going for flag hoisting?
Yes.
I mean, we have one in our complex,
yes.
so that happens every year, and always good.
Yeah, with the kids.
Great for the kids, yeah.
Great for the kids as well. You know, they love the atmosphere. But Prashant, what are you doing about Sonia this morning? It's going to be difficult to concentrate, yeah?
I think so.
I don't know what you guys are talking about, okay? It's a holiday tomorrow. The mood is good. The Bulls are in a good mood as well, right?
Yeah, we are in a good mood as well.
Absolutely.
Let's get straight to it.
Well, let's tell you what happened last night, as we always do. I mean, begin the sort of setup. So last night, I mean, consolidation, right? I mean, the US market has been doing pretty well for the last, 4 or 5 days. And last night, not very much. Equities, at least. You look at the S&P, you look at the Dow, the NASDAQ. A day of consolidation after very strong gains. You know, as of day before yesterday, the NASDAQ was up almost 7.5% in 3 days flat. It's up some 8.5% for the year. So it's run very hard, very strong. And smaller NASDAQ stocks are up 30, 40, 50%. I mean, I'm not talking about the Microsofts and Amazons of the world, but smaller ones. So some consolidation is due. The one thing which I want to point out, and this was kind of emerging, and I mentioned this yesterday as a bit of a risk, was oil prices steadily marching all the way to $90. But the rally is stalled. At least yesterday's price action is important, and we'll maybe put out a chart later. There was an important resistance at 89.90 to a barrel. We got to it. And then we pulled back. The Brent oil price yesterday closed down 2% to about 86.41. Technically speaking, I mean, it should head down to about 82 now. So if this pattern plays out, we'll talk about this. Anyway, this is important from an India macro perspective. Now, where do we go from here? I mean, global Q, and I think that could determine the course for US markets, NASDAQ, and broader, I mean, the US markets per se after the rally we've had. If the commentary is positive, optimistic, I think, you know, the S&P maybe takes out for 4,100, sort of goes higher. If it is cautious, like, for example, what we heard from Satya Nadella recently, you know, it could, I think, result in a bit of a pullback. So I think over the next couple of days, as large tech companies report earnings, we'll hear from them in terms of outlook for the rest of the year. It'll be important to watch. I'll get to the Nifty and the Bank Nifty. So yesterday was a bit of a disappointing day because, I mean, the market opened with a flourish and then it lost mostly all of the gains to end absolutely flat. Intraday, it did take out 18,183, which is the recent high. But then it actually got higher than that, but then it pulled back from there. So a close above 18,183 and then 18,191, which is the retracement level, is important. I mean, the cluster basically is important to gain further momentum on the upside. So that's point number one. Near-term support stands at 18,016, which is, I think, a bit of a near-term reversal kind of level. It'll be good if that level is held, if we get some correction, some selling. On the Bank Nifty, it found resistance at this falling trend line. Exactly. I mean, it hit the day's high, was at the trend line, the falling trend line, and then the Bank Nifty reversed. That level, yes, which is yesterday's high, stands at 43,079, 43079, and that needs to be crossed on a closing basis before we can kind of talk about higher levels. If you're able to do that, just putting this out, on the way up, 43,578, which is the previous swing high, is the next level to take out on the Bank Nifty. And the low on the Bank Nifty of 42,334 should not be broken on the downside for this higher high, higher low kind of pattern not to be violated. So some levels on the Nifty and the Bank Nifty. But yesterday, I think, was a bit of a consolidation kind of a day. We don't have very much by way of cues last night, overnight. You know, SGX on your screen indicating about a 50-odd point downside, maybe another quietish kind of day. Tomorrow, of course, we've got a market holiday coming up as well. Guys, hi.
So you said it's a consolidation kind of a day, right? It's been a consolidation kind of a month for this market. Every time it gets to 18,200, there's a bit of a hurdle, bounces back from 17,800. So let's see if there's any big trigger that can take the market out of this range. For now, it's a very narrow trading range that we're looking at. The Nifty is facing resistance at that 18,230 level, which is the January high that we spoke about earlier. But a lot of triggers to watch out for. The DII is bought in the cash markets yesterday to the tune of 1,144 crores. FI selling, although it has been reducing over the last many days. Yesterday was a relatively higher figure, about 760 crores. But I'm looking at a lot of local cues. So there was a good earnings that came in from the likes of, say, TVS Motor. Autos are back. So you saw good earnings from Maruti. TVS is moving very aggressively in the electric vehicle space. A lot of brokerages have raised their target prices and the management commentary is positive. So just keep an eye out on that space. On the flip side, consumption continues to come out with subpar earnings. So Pidilite had a volume growth of just 1%, very weak earnings coming through from there. So that pocket could continue to be on the back burner. It's F&O expiry today, so that's important as well. And the event to watch next week would be the Fed meeting on the 31st of Jan, where there's a 25 basis points rate hike expected. So in the run-up to both the budget and the Fed meeting, the market is sort of in wait and watch mode. There are some big earnings today. There's Bajaj Auto, Tata Motors, so we'll keep tracking that one. But up until these big events take place, the market is sort of, fixated with this very tight range, Nigel.
Well, that's right, Sonia. In fact, we have the resistance level on both the indices, whether it's the Nifty or the Nifty Bank. On the Nifty, that 18,200 is a bit of a hurdle, and the Nifty Bank, 43,000 odd mark. And I say this because the last 5 sessions, you look at the Nifty, we're going to around 18,150 to around 18,200 odd. And from there, you're seeing some bit of supply. Let's pull up the highs of the last few days. And I made this point even on Monday morning that, in fact, that's the bit of a congestion zone for the index. We go to those levels and then we see profit taking coming in there. And for the Nifty Bank as well, last couple of sessions where we were going to around 43,000. And, from there, we have seen some bit of selling out there. So short point is we have the resistance in place. If the bulls can surprise and, in fact, get past either of those levels, 43,000 or around 18,200, then we'll be good for more. Let's take a look at what the FI is in the F&O market. Well, yesterday as well, the positioning now has moved to the long side. So from net short, they moved to net long, 58% of their positioning on the long side. They bought more calls than puts, so that's pretty good news. But the problem is, in the final hour of trade, you saw some unwinding of puts that were written earlier. And, that's making me a little bit cautious. Where was that unwinding? 18,100 put. Right till the last hour, there was addition out there. But towards the final hour of trade, there was unwinding out there. Now, this morning, let's see whether or not we see writing yet again at that particular level. Remember, it has a fair bit of open interest. The call writing continues to between the 18,150, 18,100 call, well, close to around 53 lakh shares were added out there, which brings us to the levels. Since the 18,150 call is getting, written aggressively, the premium is around 35 rupees. So your resistance is at around 18,150. And the positioning is such that at least as of now, with the data points that we have, the 18,050 is the level that should be held out for this series itself. That's for today's session. SGX Nifty suggesting you get a bit of a pullback. Maybe that 18,050 odd could be a good entry opportunity. If you can get in out there, keep a stop loss of around 20-30 points odd. Maybe risk reward could favor you going by the positioning. Final hour of trade, well, things will get rather volatile, but I'm counting on the zone of around 18,050 holding out.
Okay, and a lot of non-index interesting stocks coming out with numbers today. There's Tata Elxsi, there's Amara Raja, there's CEAT, so there's plenty to talk about through the course of the day. Before we start, let me tell you what's lined up in the first half hour of the show today. We'll get you updates from the markets across the globe. Mark Matthews of Bank Julius Baer & Company will be joining in to discuss the global trade setup. Later, our research team will bring you the CNBC-TV18's list of top 10 stocks for the day. At around 8:30, we'll do a fundamental stock analysis with Deven Choksi of KR Choksi. All right, first up on the equities front, we have a comment coming in from Sanjay Mukim of JP Morgan, who says their conversations with investors indicate that positioning in India seems to have become too consensus now. He says the risks are that a macro slowdown could drive a shift from banks to IT, and sustained higher commodity prices could renew margin concerns for domestic businesses. He says they react to the first concern but not at the second. At the moment, given perceived probabilities, they are reducing their overweight on staples and adding some metals and Reliance Industries. They are also reducing allocation to Bharti following their downgrade and adding more two-wheelers in their list.
Well, here are some money market views as well. On the rupee, we've got Kunal Sudani of Shinhan Bank, who says that the US S&P Global PMI remained in contractionary territory, but is appearing to bottom out. Eurozone business activity made a surprise return to modest growth in January, pushing Euro-USD pair higher, while business activity in the UK reignited recession fears and weakened the British pound. Dollar index may find support at the 101.3 levels For the dollar INR pair, Kunal expects 81.3 to act as a support while 81.9 as a resistance.
All right, and on the bonds, Neeraj Gambhir of Axis Bank says bond yields traded in a range of 7.28 to 7.36% for the week. For the US, weak retail sales and PPI data led to initial buying in domestic bonds, but the bonds gave up gains on weak auction demand and higher SDL auction supply. Neeraj expects range-bound trading to continue till the budget. Next week is light on data and markets will take cues from weekly auction demand and the SDL auction supply. He expects the 10-year benchmark bond yield to trade in a range of 7.3 to 7.35%.
All right, Mark Matthews of Bank Julius Baer and Company is joining us now. Mark, great to have you with us here. Thank you very much for your time. Are you looking spiffy, Mark? Looking good.
I got a haircut.
I don't know. You can't see us, but I mean, we're looking a little different than
Not
usual.
too bad ourselves.
If you may say so ourselves. Mark, I was reading this note from GMO. And they've closed watchers and long-time investors in emerging markets. There was a note dated today. And their view is that, it's unlikely that we've seen the worst in U.S. equities. Usually, markets overcorrect before things become better. I just wanted your thoughts on that. I mean, last night, of course, price action was neither here nor there, a kind of consolidation kind of price action. But just wanted to start there. Go on.
I don't think it will retest the low, the U.S. market. The low is in October, we think, and I think this year will be a good year. And the most important thing to me, technically, if you will, is the very noticeable trend change in the Philadelphia Semiconductor Index. And that really led the broader markets down all through last year. But it has broken that downtrend. It's up 15% so far this year. And now we can see the NASDAQ is also breaking its downtrend, just preliminarily. But I think over the next few weeks, we're going to get a confirmation of that. These actually look like reverse head and shoulders. So I know GMO don't do technicals. They're very fundamental and value-driven. But I think the technicals are important, particularly in a world as topsy-turvy as the one we've been in for the last few years with COVID and whatnot. And so I don't think it's a down year. I think we'll probably be up about 10% this year. And the S&P is already up 4.5%. So maybe I'm wrong. It'll be more than that. I don't think it'll be down.
Okay, well, let's just take a quick look at what's happening with the global markets. The Asian markets this morning are slightly subdued. So, a couple of those markets not doing much. The Nikkei is absolutely flat. The Korean index is up about 0.3%. Hong Kong is having a good showing, though. It's up almost 400 points this morning. And the SGX Nifty is indicating that we will have a muted start this morning. Do keep an eye out on a lot of things. I mean, there are good numbers that came through from a lot of sectors, whether it's auto, whether it's IT, banks. So that seems to be the main focal point for investors. Mark, good morning. It's been a strong earnings season so far, not as bad as perhaps people would have expected it to be, and a couple of pockets have done really well, whether it's technology, mid-cap tech has done well. You've had, auto names, banks have been leaders of the pack back home in India. What is your preference now for the rest of the year as an Indian investor?
Banks. I mean, they are the engine of the economy, and the economy's doing well. And they're not expensive, and they've written off all their NPAs. So I think it's simple, but it works. And there's more upside in the banks. I expect the Indian economy to be approximately a $10 trillion economy over the next 15 years. In other words, it'll treble. And the excellent proxy for that is the banking sector, because it lends to the broader economy.
All right. Hi, Mark. It's good to hear that you're saying that the U.S. markets will do well. But what about the Indian markets? We've been a little slow off the blocks in 2023 so far, or for the past 1 month or so. We've been relative underperformers. What kind of returns will you be baking in for the Indian markets? If global markets are pretty steady, can we outperform?
I mean, as I said, we expect about 10% in the S&P this year, and broadly I would expect around the same for the Nifty. Earnings growth will be higher than that, but it is already an expensive market. So whether it outperforms or underperforms, I can't tell you, Nigel, but I do believe it will be up alongside the S&P, driven not so much by foreign flows, but more by the local flows, just as it was last year.
Okay. Do you still believe in that narrative that a lot of money could perhaps move out of India and into markets like China because of how attractive China is looking from a valuation perspective?
No, I don't, because there never was much foreign money in India in the first place, unlike the run-up to the global financial crisis, which in 2008, India went down, I don't know, 55% or something like that, even worse than the S&P, despite the fact that it had nothing to do with the global financial crisis. But foreigners had invested a lot of money there. Well, we know that foreign inflows into India have been very low over the last few years. And in fact, you would know better than me, but maybe they've even been negative. I don't know. So I don't think there's a lot of foreign money in India to sell in the first place.
Mark, you think on the technology side, things are going to look better? Tech stocks?
Well, the technicals of the tech stocks are telling us that. And of course, the earnings are coming out. And you pointed out earlier that Microsoft are giving pretty weak guidance for this coming quarter. But I wouldn't worry about the earnings, because the earnings revisions of analysts are always among the most lagging of indicators. And what's very curious, if you look back in history, is the years when earnings growth were down were actually more positive on average than the years when earnings growth were up. And the reason for that is very simply that the market always looks forward. And so the fact that the tech stocks are now rising, the Philadelphia Semiconductor Index is breaking out, to me suggests the market is already looking toward the summer. And in the summer, I think we will start to see the economy globally bottoming and picking up. Perhaps even before that, now we've got this China reopening. And I presume you saw the European PMI last night was a positive reading, which nobody expected.
Okay, all right, Mark, we'll leave it at that. Thanks a lot for joining us. And we will, of course, chat with you again very soon. Thanks for your thoughts. Let's slip into a quick break. Lots of stocks to talk about, so don't go anywhere. Our list of top 10 stocks is coming up in just minutes from now.
Welcome back. Hope you're having a good morning. Well, we just told you about the entire trade setup as well as how the global cues are stacking up. But our research team is joining in to run us through CNBC-TV18's top stocks for the day. Well, Sonia, you go first. TVS Motors, how are the numbers?
Well, it was a good set of earnings in line with street estimates. So I'm going with green over there. It was a solid revenue growth of almost 15% that TVS reported this time. It's the fifth consecutive quarter of 10% plus margins, and that's something that the street will definitely like. TVS was struggling to get to 10% for many years, and now 5 consecutive quarters of 10%, profit growth of 22%, and the management commentary is what the street would like the most. Very positive. They are guiding for volumes of 100,000 units for FY23. Now, this implies they would do 50,000 units in Q4 versus about 29,000 that they did in Q3, and aggressive expansion plans in the electric vehicle space with the TVS iQ, which is the highest selling electric vehicle in the two-wheeler space. Now, brokerages, it's a mixed bag, really. So here is the list. Citi CLSA have a sell. They have target prices that are below 1,000. Morgan Stanley and Jefferies have buy in equal weights with target prices anywhere between 1,100 to 1,550. So it's split opinion, but the numbers are decent. No two ways about that, and going with green.
All right, Sonia, thanks very much for that. Well, Pidilite is the next one we're going to talk about. Mangalam is standing by with more on numbers. Mangalam, hi, morning.
Good morning. So weak numbers coming in from Pidilite. In fact, the revenue is just under 3,000 crores. The street was working with a number upwards of 3,150 odd crores. The EBITDA, as a result of which, fell below 500 crores as well. We were working with a number of 580 crores. The margins much below street expectations. At the same time, the net profit too has missed estimates. The company's reported consumer and Bazaar volume growth of just about 1%. Most of the street were working with a number of anywhere between 3 to 4 odd percent. Gross margins, while they've improved a minor bit sequentially, about 80 basis points, they still remain under pressure. The company cites this weakness to increased inventory ahead of price hikes at the same time last year. So as a result of which, the base was extremely unfavorable. They've said that gross margins have improved just marginally because of the high-cost inventory that they were sitting on, and demand conditions in rural and semi-urban still remain weak. However, they're optimistic about the future, but until that happens, expect the investors and the stock to remain in a bit of a sticky situation.
Okay, all right. Thanks a lot, Mangalam, for that. Let's go across to Reema now. She's tracking Indus Towers this morning. Reema, over to you.
Thanks so much for that. So Indus Towers has reported a weak quarter. It's reported a loss for the first time ever of 708 crores, and this is on the back of the company making a doubtful debt provision, sort of like a write-off of nearly 2,300 crore against receivables from one of the telcos, which should be read as Vodafone Idea. The company indicated that Vodafone Idea was making part payments of its outstanding receivables till December. They had committed to making full payments from January of 2023, but now Vodafone Idea is finding it difficult to make those higher payments. So as a part of prudent accounting, they've decided to write off or make that doubtful debt provision. Now, as a result of which, you've seen the margins collapse. Now, this is the third consecutive quarter that the company is making this doubtful debt provision. This quarter, it's a big amount of 2,300 crore that's driving the margins down to 17.5%. And the company consequently has reported its maiden loss of 700 crore plus. Back to you.
Okay, all right, Reema, thanks a lot for that. Well, let's go across to Ekta. She's joining us to tell us about Sun Pharma. Ekta?
Thanks for that. Well, yes, Sun Pharma is in focus because Taro released their numbers. So it is a recovery that we've seen Q-on-Q. Net sales have come in at 139 million versus 130.5 million Q-on-Q. Operating income has come in at a profit of 1.3 million, which compares to a loss of 6.8 million last quarter. So that is a margin of 1%. Hence, that is positive. Net income at 7.3 million, which compares to a loss of 2.8 million in the previous quarter. Year on year, however, the numbers are still weak, but to put it into perspective, margins at 1% versus 27% last year. Net income is down 70% on a year-on-year basis. They continue to experience price erosion in the US markets, which has impacted the overall performance. Cash on books remains high. Stock was up around 2% in US trade, and the overall contribution to Sun has also reduced. So that's the reason why we could probably see Sun in the green today, despite the weakness on a year-on-year basis for the Taro numbers.
Okay, going to be a sunny day then, perhaps. I just had to say that. cliches all across. Well, Surbhi is with us. She's going to tell us about United Spirits and how the numbers look. Surbhi, over to you.
Hi, thanks for that. So United Spirits declared their numbers yesterday and they don't look so good. Even when you adjust for the slump sale of the popular brands last year, the revenue growth is 10% on a year-on-year basis at 2781 crores. But it's the gross margins which are under pressure. The gross margins are impacted by the input cost inflation and is down 400 basis points on a year-on-year basis. This has trickled down to the EBITDA as well, which is down 12.4%, and the margins are down 340 basis points. The company has also spent 150 crores on supply agility program, which affects their profitability. When you exclude that, their PBT is down 3% at 303 crores. Both the segments, Prestige and Popular, have seen a volume growth of 3% odd. The realizations of the premium segment is up 8% on a year-on-year basis, which has driven the revenue growth, and the Popular segment realizations is down 1% on a year-on-year basis. The company has sold its stake in its wholly owned subsidiary, Sovereign Distilleries, for 32 crores. The management has commented that they expect the inflationary headwinds to continue for the shorter term, and that is why the stock could be under pressure today.
Okay, thanks a lot for that, Surbhi. Well, Sonal joins us as well to tell us about a whole host of stocks that she's tracking. Sonal, morning.
Good morning, Nigel. Let me start with Macrotech Developers. We already knew the Q3 operational update, which was strong. Now the P&L is out. Of course, for real estate companies, it's lumpy accounting. So still looking at those numbers, margins have declined 200 basis points, while profits are up 6% on a YY basis at 300 crore rupees. But if we look at the guidance of the company, where the company had guided for 11,500 crore rupees in terms of sales this year, they say they are likely to exceed it. They are tracking the cash flow guidance of 6,000 crore rupees for FY23. However, now they say they'll be able to reduce debt only to 7,000 crore rupees versus 6,000 crore rupees that they had guided for earlier. In terms of launches, they have 14 launches planned in Q4 with an estimated gross development value of around 5,760 crore rupees. Moving on to some chemical names, Tattva Chintan Pharma, where it was a YOY decline, but quarter-on-quarter recovery for the company. Revenues were up 15%, EBITDA down 25%, margins were down 800 basis points, leading to a profit decline of 49%. So one of their highest highest margin products, which is structured directing agents. That is where some demand was delayed because of the Chinese shutdowns that we have been seeing. They say full recovery in SDA is expected only by second half of FY24, on the back of which I'm expecting the stock to be in the red. Lakshmi Organic, again, a quarter-on-quarter increase because quarter 2 was really weak for the company, but YOY decline continues. Revenue down 24%, EBITDA down 48%, profits also down 62%, but quarter-on-quarter, of course, it's an increase for the company.
All right, Sonal, thanks very much for that. Well, Nazara Tech, Home First Finance are the next two companies on our radar. Rima is standing by with details. Rima, hi.
Hi, so it's a good quarter for Nazara Tech. The company has reported a top-line growth of 70%. Margins have come under a bit of a pressure, but remember, this is a company with a low profitability, so margins do tend to swing around along with the bottom line. So margins have come in at just sub 10%, but aided by other income, a higher other income, the profit growth is solid at 75%. Home First has also reported good numbers, and NII and profit growth of about 27-29%. NPA ratios have declined on a sequential basis. The customer acquisition is strong. Back to you.
Okay, thanks a lot for that. It may be too much for you folks to digest so many numbers, so let's do a quick recap. Positive stocks, or stocks with positive news flow. There's TVS, there's Sun Pharma, Lakshmi Organics, Nazara Technology and Home First Finance, Pidilite Industries, Indus Tower, United Spirits, Macrotech Developers and Tatva Chintan Pharma could be in the red this morning. So lots of red stocks perhaps on the back of numbers being lower than expected. Pidilite Industries could top the charts considering there's been weakness in the FMCG space. But let's do one thing. Let's also get a quick handle on what's happening in the world of commodities. Manisha Gupta joins in for a roundup of all the action there. Manisha, hi, morning.
Hi, morning, and thank you for that. Well, I'll start with the crude oil prices, where after 2 weeks and 15% of gains, we finally have seen some profit taking, 2% of decline in the overnight market. This is after the U.S. manufacturing has contracted for a 7th straight month, and the U.S. inventories show a 5th weekly build-up. The markets have been taking very positive stance from the China reopening, but at this point in time, that really seems to be bothering because on-ground actual demand is yet to come in. Also, take a look at the metal prices, and we have seen strong gains continue into this one. Copper prices continue to hold at a 7-month highs. Aluminum prices trading at a 7-month highs as well. And you have gold prices now trading at a 9-month highs in the international markets. The Indian markets continue to trade near all-time highs yet again.
Okay, Manisha, thank you very much for that. More on commodities in a bit from now. We'll take a very quick break here. We are back, and we'll have Deven Choksi of KR Choksi joining in for some fundamental stock talk. We'll also have the management at UCO Bank to discuss their third quarter numbers in a bit from now. Stay with us.
Welcome back to Bazaar Morning Call. We have Deven Choksi of KR Choksi joining us now to tell us how to approach the markets, and so many numbers to track. So let's take them one by one. Deven, good morning. I wanted your thoughts on autos because we've had a strong showing both from Maruti and TVS Motor. Of course, whether there's valuation headroom or not, that is debatable. But you tell me, what are the stocks that you like from the auto space post-earnings?
Yes, Sonia. Good morning. Well, certainly Maruti's number have been, I think, quite some relief number, as I would call it, as after, I think, many uncertain quarters in past, wherein even the margins were affected because of the issues pertaining to forex. In this particular quarter, fortunately, I think all the counts have remained positive. On the demand side, the situation has remained extremely convincing. They could deliver the vehicles, I think, which they booked. The premium range of vehicle were actually delivered. So that is again, I think, suggesting relatively better time ahead for the stability of the margin. And at the same time, I think no adverse impact of forex into the books in this particular quarter either, which is also giving a kind of a stable outlook going forward. As we see it, I think given the kind of pipeline demand that they have, I would rather like to believe that this fourth quarter also is likely to go relatively good along with, I think, the third quarter. So the second half of the financial year for Maruti remains extremely strong and convincing. Whether I think the stock price will go up, I'm not too sure. But I think the inclination would be to stay with commercial vehicle as far as I think the preference in the auto is concerned, where I believe that the growth opportunity is going to be larger going forward in the financial year 23-24.
Okay, hi Deven, good morning. Deven, what about Pidilite? A top quality stock, great management, made a lot of wealth for investors over the longer term. But the past quarter's numbers, there's a margin miss, and the volume growth as well was lower than estimated. What's your view on that name?
Well, yes, I think the margin miss is also understood largely because of the fact that the doubled raw material cost, I think, which the company had to face in last 2 quarters. But I would like to believe that I think that is a past. Probably, I think whatever the high cost of material which they carried into inventory, probably I think that is out of the books, and probably in this particular quarter, the fourth quarter, you should see the margin returning to normalcy. Should that be the situation, I guess I think the relative confidence in the margin side I think would remain high, particularly because of the stability in the raw material prices. The demand output remains, I think, always positive. I don't see too much of a problem. Maybe in one particular quarter, if some numbers have not come up, I think that should not be a cause for worry. It remains a quality stock as far as I think the business outlook is concerned. Maybe valuation has always been a challenge to buy into in a rising market. So maybe corrective prices, I think if the valuation comes down, it becomes a buy opportunity.
Devin, hi, good morning. Names like Axis, etc., what's your view? I mean, a lot of hullabaloo day before and yesterday morning about how the numbers are super. The stock was one of the top losers on the index. And some of the other large banks have also kind of suffered a similar fate. ICICI, of course, did a little better. HDFC Bank disappointed. Price action disappointed. Is this largely a function of foreign flows and when they will return for these stocks to do well? Because earnings-wise, things are pretty good.
Yes, Prashant, good morning. Absolutely, I think right on spot as far as I think this is concerned. Even yesterday also, if you see the gross selling done by the FIIs has been, I think, on a larger side. So from that perspective too, I guess I think some of the large cap heavy weight, I think, stocks into the portfolios, into the indices, I think are basically getting victimized because of the constant selling happening from their side. In fact, as we gather, the selling is likely to be more, but unfortunately, they don't find enough depth in the market. As a result of which, I think it's a constant, but I think gradual selling that they are doing in this market. Nothing wrong with the fundamentals of any of these banks. In fact, I think ICICI came up with a good set of numbers. Axis indeed came up with a very good set of numbers, particularly I think from the past quarters. I think these numbers are far more satisfactory and convincing that yes, all the strategies that the bank has put on track, they are on track. So from that point of view too, I think I like both ICICI, Axis and HDFCs, I think from the investment perspective as well. Even the same is the story going in for Reliance. I think the market remains subdued in the end because of Reliance. I think the stock fell because the unloading of the portfolio is happening from that side. Nothing wrong with the fundamentals again. So yes, I think we'll have to wait and see till the time I think this particular selling gets over. But otherwise, for investors, I think this fall in the prices would be a buy opportunity. As I see it, I think these stocks have the potential to give 20% odd kind of a return in a full year with the fall in the prices that we are currently experiencing.
Okay, all right. Devin, request you to hang on. We have a management with us, a banking name that's joining in. And it was a strong quarter for UCO Bank with the best profit after tax in 29 quarters. The loan growth also looks robust, and the bank has managed to bring down its slippages. So it was a good past quarter. But what's the way ahead? We're joined by Mr. Soma Shankara Prasad, the MD and CEO at UCO Bank. Hi, sir. Good morning. Thanks so much for joining in. Well, a couple of aspects. Your advances are looking very, very strong on a sequential basis, up by close to 7%, on a year-on-year basis by more than 20%. What kind of a loan growth are you penciling in for FY23 as well as 24? And also, given that on the liability side, well, the costs are likely to go up. So can you maintain NIMs around this 3% odd mark?
See, as far as the loan growth is concerned, we have had a strong quarter. I mean, for the last 3 quarters, we have been seeing a strong loan growth. And I expect this momentum will be carried forward into the fourth quarter. So as you know, we have ended the 9 months with a loan growth of almost 20.5%. And we expect this to be carried forward into the fourth quarter. So far, there has been an upside as far as the NIMs are concerned because of the repo rate hike, where the transmission on the loan side happens immediately, while on the deposit side, there is a lag. But as you all know, what has happened in the last quarter is that there has been a tightening of liquidity, and all banks have raised their deposit rates. So the marginal cost of funds, that is the incremental cost of funds, would go up for the banks, and that would have an impact on the NIM. But still, see, our NIM right now, domestic NIM is at 3.18 and the bank's NIM is at 2.99%, almost 3%. So we expect to maintain this NIM going forward into the fourth quarter.
Okay, and you said loan growth at 20.5% year to date, Mr. Prasad. What do you see at the end of the full year? You said you will maintain it. So we're looking at perhaps 20% plus. Is this something that you could do in FY24 as well?
See, FY24 is a little far away. So, I mean, let us stick to the last quarter of this year. We expect this loan growth we expect to maintain this loan growth in the fourth quarter.
Okay, got that. Can you just break it up for us? Where are you seeing the growth coming from between, say, corporate, agri, retail? Where is the maximum amount of potential over the next year or so?
See, so far, if you look at our loan book, our corporate loan book has grown at 30%. Whereas, if you look at retail has grown at 15%. So there has been a lag between the corporate loan book and the retail loan book as far as the growth is concerned. So again, in certain segments of retail like car loans and home loans, we see strong demand. In fact, our home loans and car loans have grown at 19% and our personal loans have grown at 23%. So certain segments of retail are showing strong growth. A corporate loan book is strong. And if you ask me what are the areas in corporate where we are seeing strong growth, of course, the NBFC sector has been one sector where we have seen, there is a strong demand for loans. Apart from that, infrastructure, renewables, cement and steel have been the sectors where we have seen a good demand. And with the capacity utilization picking up, I expect that the demand for working capital will also go up in the fourth quarter. Therefore, as far as the corporate is concerned, we are seeing a strong pickup.
Okay, all right. Let's focus on asset quality then. You know, your gross NPAs have come down to around 5.6%. Even your net NPAs have improved. So what's the guidance on the asset quality front? And even the slippage ratio has improved quite a bit. So guidance on that, on those parameters.
See, if you look at the slippage ratio, actually, the slippage ratio has actually drastically come down. It was around 2% last year. It has come down to 1.48. And if you look at the slippages last year, my slippages were around 6,000 crores, which was about 1,500 crores per quarter. And this particular year, the slippages have been roughly about 500 crores per quarter. So my slippage right up to the December quarter is somewhere around 1,500 crores. So that has been the main reason as to why, the loan quality has improved. The other reason being there has been a strong recovery as far as the bad loans are concerned. Because if you look at my recovery plus upgradation for the December quarter, it comes at 1,001 crore. While the slippages are at 490 crores. So consistently in the last three quarters, our recovery has been more than the slippages. So that is one of the reasons as to why the gross NPA has come down. Because while bringing down the gross NPA, see, if you look at our gross NPA even as on 31st March 2022, it was at 7.89%, and now today it is at 5.63. So the gross NPA in these 3 quarters has come down by about 236 basis points, whereas my provision coverage ratio, which is very important for us, that has gone up by 200 basis points. It's at almost 93.5. Which is the third highest in the banking industry behind IDBI Bank and Bank of Maharashtra. So we have been consistently been able to bring down the gross NPA while at the same time increasing our PCR. That is primarily because our slippages have come down as well as the recoveries have gone up.
Got it. All right. All the best, Mr. Prasad. Thanks a lot for joining us and speaking to CNBC-TV18. So that's a good set of numbers. The loan growth is quite robust. They are maintaining a 20% loan growth that they've done in the 9 months of this year. And they're also seeing a good pickup in corporate loans. 30% is the kind of growth that they've seen. Now, Devin Choksi is still with us. Devin, this has become the darling of the market, right? The PSU banking space. But for some of these really small banks like UCO Bank, do you see a lot of potential for a retail investor, or are you cautious here?
So I think, Sonia, my reading says that I think this is probably one of the best times for most of the public sector banks. In the previous year, the government has capitalized them. In subsequent period of time, I think the liability franchise has been managed well because of, I think, improvements in the deposits, particularly saving deposits. In a rising economy, I think they are also having benefited from the higher offtake of loans, both from the term loan side as well as from the working capital loan side of the corporate sector, and also in the retail and housing sector included. So from all in all put together, I think on one side, you don't have the significant amount of pressure which you had, I think, on non-performing asset provisioning side. Liability side is well managed. Credit offtake, I think, is well taken care of. So all checkboxes, I think, are basically showing the positive trend going forward. However, and at the valuation wise, I think these banks remain comfortable. On the downside, I think the protection is already provided to valuation. However, to buy them into the portfolio, I guess I think one will have to look at how the budget provides some clarity on consolidation of public sector banks. If I think further consolidation of public sector banks does happen, then probably it could invite some serious money getting into it. Otherwise, I think smaller banks buying into the portfolio for a very long term, I'm not too sure whether I think that convinces me with that argument.
Okay, all right. Devin, thanks for that view. We'll just take a quick break and come back at about 8:50 or so. We have lots lined up in the next half an hour, so don't go anywhere. In a bit, we will, have Anuj coming in to give us a quick trade setup. Post that, we'll bring you the top stock picks for the day from our technical and F&O experts. Before the market opens in CNBC TV18 Stock Board, we will highlight all the top stocks in the news to focus on for the day.
Okay, welcome back. There's about 10 minutes to go for the pre-open session. The SGX is indicative of a 50-odd point sort of a down start, 18,087. Yesterday, gains fizzled out, and generally it's looking a little skittish here in India. Anuj is here in the studios to tell us how he's seeing things. Anuj, hi, morning.
Morning, Prashant. Just the kind of market which doesn't want to move, and that's market's choice, right? I mean, it's been very volatile, but within a small band, just refusing to break down or break out. The broad range is 17,800 to 18,200. My sense is the range breaks after budget and the market gives you a 600, 700 point expansion. Of course, brave men to predict the direction of that breakout or breakdown. What's happening is IT and HDFC twins are preventing a big fall from the market, and that's 33% of the Nifty, which is in a bull market of its own, near-term bull market. So you need to smartly play this range. Just to dive down further, if you look at the Nifty, the combined weight of IT and HDFC twins is around 33%, and that is actually in a strong sort of uptrend. Combined weight of Reliance and ICICI Bank is 18%, and that's in some kind of a near-term downtrend. So those are sort of counterbalancing, and on balance slightly positive, and that's why the Nifty's trajectory has been one step back, two step forward. It's a no-trade zone, except if you want to get into a scalping or a scavenging trade, where buying near 18,050 and selling near 18,200 is working. And the bank Nifty is even more volatile because you have HDFC Bank on one side and ICICI Bank on the other side, both almost similar weight, both moving in different directions right now. HDFC Bank clearly now the leader for the bank Nifty, at least in the near term. So very tough to sort of approach any kind of trade on the bank Nifty. It's again a range 42,500 to 43,000, and my sense is that's what perhaps the expiry would do today. Just move maybe within a range. Maybe a post 3 p.m. move, but tough to predict that right now.
Okay, all right, Anuj. Thanks a lot for that. Well, let's move on then. I think we can get our technical experts who will be joining in. Sudarshan Sukhani as well as Mitesh Thakkar. Good morning, gentlemen. Thanks so much for joining in. Well, we have been in that range, right? That 1850 to around 18,200 that we've been talking about. What's the trade today? We're likely to start off closer to around that 1850 odd mark. Sudarshan, you first.
Yeah, good morning. Well, we are in a trading range, and there's no sense in trying to predict how this range will break out or break down. It's much better to stay put. Yesterday, there was some upside momentum, so buying was justified, although it didn't work out. Today, there is no momentum at all. So for today, I think the best trade is not to do anything. Remember, tomorrow is a holiday, so it's easier to step aside and let the market do whatever it wants. The trading range has to break either on the downside or on the upside for a meaningful trade to occur. But don't try to do it today. Just let the market tell us where it wants to go. So avoid.
Okay, avoid. So perhaps could be a sideways day today. Mitesh, what about you? What's your own expectation on the index? And while you're at it, tell us about individual stocks as well.
So I've been, advocating that a breakout will take place once we start closing above 18,185. That's not happening. A few weeks back, it was 17,800 on the downside. That also didn't happen. So it's still a market which is contracting within a range. Broadly, 18,200, 17,800 are the contours. And I think there is now a chance of us bringing on the upside, given the fact that the daily indicators are slightly turning positive. But again, the price action has to confirm it, and that will happen once we get a closing above 18,200. So till then, trading with more of stock-specific biases, and that's how we are approaching it, but waiting for a breakout or a breakdown.
Gentlemen, good morning. It's almost like a ship adrift at sea without wind in the sails, right? I mean, just you wait for the wind to come, and then catch the sails, and then it'll take you. Otherwise,
it's also called the lull before the storm.
You had to throw the word storm in there. So,
I'm not.
We don't want a storm. We want a gentle gust of wind, which takes it nicely, but not too rocky. Well, let's get stocks out of the way. Sudarshan, in terms of trades, what do you have on your list today?
Well, it's a choppy market likely, and Hindustan Lever is a buying opportunity, Unilever. Remember that had a big decline on the results, and that gap is now getting filled up on the upside again. So that decline was a knee-jerk reaction. It's a buying opportunity, the stop under 25.50. Intraday shorts are possible in Adani Ports. Short selling should be done only intraday. Adani Ports is an intraday short with a stop above 774. HDFC AMC, that AMC which is falling day after day, is another intraday short with a stop above 2010. And finally, Infi is a buy. Infosys is breaking out from a small flag-like pattern. Now, whether it works or not, this market is not rewarding anything. But for whatever it's worth buying into with a stop under 1540.
Okay, got that. Sudarshan, Mitesh, what about you? Individual stocks?
I will have a mix of buy and sell calls, so 2 buys and 2 sells. On the buying side is Bajaj Auto, which had a good breakout yesterday. Today, with the SGX mildly down, you might get a slightly better entry rate, but otherwise also, it's a buy with a stop below 36.45 for targets of 37.60. LTI Mindtree is the next stock that's on the buy list as well. Keep a stop around 44.55. 46.10.20 is the first target range. And on the selling side is Hindalco with a stop at 490, where I would look for pullback to about levels of 470 on the downside. And Balrampur Chini, that's a sell as well. Keep a stop just about 380.5 for targets of around 360.
All right. Well, let's do one thing. Let's take a quick commercial break on that note. Lots more coming up. We also have Rakesh Arora of GoIndiaStocks.com for a discussion on Q3 earnings of Ultratech Cement and the sector as a whole. Stay tuned.